The future of Bitcoin, economic freedom and wealth mobility. Bitcoin has been touted as a generational wealth creation opportunity by its proponents. They believe that if Bitcoin becomes universally used as money in the future, its price will skyrocket, creating generational wealth for those who invested early. However, it is important to understand that simply buying Bitcoin may not guarantee wealth for future generations. In this video, we will explore the concept of economic freedom, wealth mobility, and how they relate to the potential future of Bitcoin. Economic freedom and Bitcoin. In a hypothetical future, where Bitcoin becomes universally used as money, it would lead to a world with the highest degree of economic freedom ever seen. Money is the foundation of all human action, and under a Bitcoin standard it would be the basis of every transaction. Governments rely on money to enforce legislation and maintain power. However, with a limited supply of Bitcoin, governments cannot manipulate its value by printing more, as they can with fiat currencies. This would result in a sound money system that maximizes economic freedom and minimizes the negative effects of inflation. Wealth mobility and economic freedom. Wealth mobility refers to the likelihood that individuals can move up or down the wealth ladder throughout their lives. Studies have shown that countries with higher degrees of economic freedom tend to have higher levels of wealth mobility. In contrast, countries with less economic freedom, such as North Korea, have little to no wealth mobility, with wealth concentrated in the hands of a few. Absorbing barriers and wealth preservation. In systems with high economic freedom, there is a possibility of an absorbing barrier at the top of the wealth ladder. This means that once individuals reach the top 1% of wealth, they are more likely to stay there due to various factors, including regulations and government intervention. This phenomenon is observed in older countries with wealthy families that have preserved their wealth through generations. Bitcoin and future wealth. If Bitcoin becomes universally used as money in the future, it will no longer be considered an asset or cryptocurrency, but simply money. Under a Bitcoin standard, the wealthiest individuals would be the ones who create the most value and contribute to economic growth. In this scenario, the descendants of early Bitcoin buyers may not necessarily be the wealthiest, as wealth preservation through generations would be less likely. Instead, entrepreneurs, value creators, and business builders would have the highest probability of accumulating wealth. Conclusion. While investing in Bitcoin may offer the potential for significant returns, it is important to recognize that true wealth preservation and creation come from the ability to create value and build assets. Economic freedom and wealth mobility play crucial roles in determining the distribution of wealth in society. In a future where Bitcoin becomes universally used as money, the focus should be on developing skills, entrepreneurship, and passing on knowledge to future generations. By doing so, individuals can set their descendants up for success and maximize their chances of accumulating wealth in a Bitcoin-based economy. As always, do not forget to like and subscribe to our channel, All Things Money, to see more content like this.